I'm there, sir.
Okay, so we are looking at the case of Adalat Products Nigeria Limited. So this company is an agro-allied company. So if you start from the beginning of the case, you see the company's history, you see information about the Nigerian economic environment, the factors that affect this business, and the strategy of this company. Yeah, so, but we are not going to start from the beginning because of time. Because if you want to read the case, it may take up to an hour to read and digest. So I'm going to go straight to the requirements of this case. So, but what we are doing today is that we are looking at the investment appraiser. So this case was tested in November 2023. Yeah, so if you look at the requirements, that's email exhibit 6, email from James Olaitan to John Okwede. So if you look at the previous exhibits, the exhibits that precede the exhibit 6, you see that like I said earlier, they've provided information about the Nigerian economic business environment and the company's history, the company's strategy, and other information that are relevant. Of course, the financials are there as well. So now this exhibit is where the requirement is stated. So usually for case study, this is how the requirement we look like. The requirement usually takes this form. So all you need to do is to know that once you see where they are making a request that you should draft a report, you know that that is the requirement. So I'm going to read the first, after the first paragraph, someone else will read the requirement so that as you are reading, I will point out some of the things that you need to always take note of. So email from James Olaitan to John Okwede. Subject board meeting. As you are aware, I'm supposed to share my screen, but I've not gotten access yet. So I'll share my screen as soon as I have access. That's why I asked you to check your WhatsApp. Are we together?
Yes, sir.
Oh, we have another person. Maya, good morning.
Good morning, everyone.
Morning. Yeah, so we've been waiting for you. We are looking at November 2023 case. So check
Okay.
your platform, check your WhatsApp, and open to page 170. I shared
Okay.
it the last
Thank
time.
you.
Yeah. Are you there, Maya? Please let me know if you are there so we can go ahead.
Okay, I'm here now.
Okay. So the subject is board meeting, and it says, as you are aware, the next board meeting at which the company's performance and strategic plans for the coming year will be considered is in 2 weeks. At this meeting, the board will review the performance of each of the strategic business units, the geographical performance, and then take the decision whether to go ahead with the decision on the Ofada Rice project. Therefore, someone should read from here. Maya. I want to know if you are with
Okay.
us.
Therefore, I would like you to carry out one, a detailed review of the strategic business unit's performance from 2019 to 2021, noting the trend in performance and returns on capital invested. You are also to carry out a review of the geographical performance of the company for the period.
Great, great. So now that is the first requirement, that you are to carry out a review of the performance of the SBUs from 2019 to 2021, noting the trend and returns on capital invested. So your review is going to be, you're going to do trend analysis, we're going to do trend, and then returns on capital invested. I want to believe someone else took you on ratios, right? Am I right on that? You've done ratios, right? Hello?
Yes.
Yes, I have.
Okay. Okay, so now that's not my area of focus for this class. My focus is on the second requirement, which is evaluation of the Ofada Rice project. That is my second area, my area of focus. So the first requirement is talking about trend analysis. You're going to do trend and also do checks on the return on capital invested. The period is stated there. For the second requirement, an evaluation of the Ofada Rice project. Your appraiser should cover the two phases of the project and provide advice to the board on whether to go ahead with the project or not. Also, indicate whether the company should stop at phase one of the project or should implement the two phases. Right? So now the second requirement is saying you should evaluate the project that this company is considering. So apparently, they have a project that they are considering, but they are uncertain. They don't know whether this project will be profitable. So they want you to carry out an appraisal. And the project has two phases, phase one and phase two. So as we read further, you'll see the two phases of that project. Now, I attach here with exhibits 6 to 9 to assist you. Other information about the Nigerian economic and business environment, details about the company, its strategy and sustainability practices are available in the files in the office. You can consult these documents as they will assist you in your review and evaluation. So, once you are reading a requirement and they make reference to any exhibit, can you all hear me?
Yeah, we can hear you, sir.
So once you are reading and there's they make reference to any exhibit, it means that there is relevant information in that exhibit that you need to look at. So once they make reference to any exhibit, quickly go to that exhibit and check that information. But let's finish the requirement. So it says you can consult these documents as they will assist you in your review and evaluation. So what are the documents that they're talking about? They said exhibits 6 to 9, and then other information about the Nigerian economic and business environment, and then details about the company, its strategy and sustainability practices. For those of you that started, when I started, I said the other exhibits before this exhibit 6, if you look at those exhibits, you see that there's information about the Nigerian economic business environment. There is information about the company's history. There is information about the company's strategy. So those are the information that this requirement is talking about, that you need to consult these documents for you to be able to carry out your review successfully. So you are to draft a report to be submitted to the board. The report should comprise a review of the strategic business unit's performance from 2019 to 2021, noting the trend in performance and returns on capital invested. Yeah, you are also to carry out a review of the geographical performance of the company for the period. Okay, I can share my screen now. So just a minute. Let me share my screen. Zainab, good morning. You're welcome. Hello, Zainab.
Hello, good morning, sir.
Good morning. Are you
Sorry,
following what you are doing?
yes, I just joined. Sorry.
Okay, so we are looking at November 2023. Yeah, so I'm sharing my
Okay,
screen. Can you all see my screen?
not yet. Okay, it's fine now. We can see it.
Okay. Yeah, so we are looking at November 2023. Yeah, so our focus is on the second requirement, which is a evaluation of Father Rice project. So there's a project that the company is considering, but they're asking questions whether the project will be viable, right? So we are looking at the possible, you know, effects, the cost and the benefits. As we go further, you see how we are going to do that evaluation. Okay, so now please draft for my review a report to be submitted to the board. Your report should comprise 1. A review of the SBU's performance from 2019 to 2021, noting the trend in performance and returns on capital invested. You are to carry out a review of the geographical performance of the company for the period. So this is the first requirement. Like I explained earlier, you are to do trend. That's what you're supposed to do here. But you're focusing on trend in performance and returns on capital invested. So you should know what are the performance ratios. If you want to check the company's performance, if the company is performing well or not, remember that they didn't state what and what you should do trend for. So if you have sales, you have gross profit, you have a cost of sales or whatever, what are you going to use to do this trend? What are the variables that you use? Of course, returns on capital invested is clearly stated, but there are other ones that are not mentioned. So it depends on the information that you have. So if you go to exhibit 6 to 9, you see the company's financial there. Know the right thing to do. So like I said, I'm not focusing on ratio or trend because you've done that already. My focus is on investment appraiser, which is the second requirement. So the second requirement says, carry out an evaluation of the Father Rice project. Your appraiser should cover the 2 phases of the project and provide advice to the board on whether to go ahead with the project or not. Also, indicate whether the company should stop at phase 1 of the project or should implement the 2 phases. Assume a rate of return equal to the target set by the company on its invested capital. So, like I said, you need to go to the exhibits that they made reference to. So what we have here, the one we are reading is exhibit 6. So exhibit 6 to 9, that's what they told us. So this is exhibit 7. That means all of this information is relevant from exhibit 6 to exhibit 9. All this, so this is the report of the SBUs. You have revenue and then other items. Then exhibit 8 for the geographical region, for the regions. You have Africa, Europe. So your ratio, I'm not going to do ratio, but I just want to explain to you this is what you will use to carry out the trend analysis. Can you all hear me?
We can hear you, sir.
Yes, sir.
So this
We can
exhibit
hear you.
7, exhibit 7 and 8 has nothing to do with investment appraiser. This one is for trend analysis. So you are doing your analysis using these variables that you have here. Remember, it's trend. So you're just doing the difference between, remember, you have 3 different SBUs. So remember, so you're going to do trend for the 3 different SBUs. So, and you have 3 years for each SBU. You have food ingredients, you have the agri products, and then you have international business. 3 different SBUs. So for the food ingredients, the trend analysis will be for the food ingredients trends in 2019, 2020, 2021. That's 2019. You check the difference. I hope you know how to do trend. You've done it before. That's why I'm just trying to, you know, make you refresh your memory. Then for the agri products, you are going to do trend for the agri products separate 2019 to 2021. Then international business, the same thing, right? So then you are still going to do for the geographical regions. You have Europe, you have Africa, other countries. So you have 3 regions: Africa, Europe, and other countries. You're going to do trend for that. Then exhibit 8, exhibit 9. This is the exhibit that contains information about the Ofada Rice project. This is the exhibit you are going to use to carry out your investment appraisal. Do we understand? Maya, Zainab, Prosper, Fidelis, are we there?
Yes, sir.
Okay, please, can you read exhibit 9?
As part of APNLS growth strategy and that produce food items from plants to pallets, the board has decided to go into Ofada rice cultivation, production, and distribution. The plant is to be in Ofada Town. Okay, the plant is to be in Ofada Town, Ogun State of Nigeria. A group of Ofada rice farmers have been recruited and organized as Ofada Corporate Farmers Association. The number of farmers in the association is 500, and they have been allocated farmlands by the state government for the purpose of Ofada rice cultivation. Each farmer has been allocated a portion of the farmland according to each farmer's express capacity for rice cultivation. APNL would provide rice seedlings, fertilizers, tractors, ridge makers, and other farming implements to the Farmers Association to be used by the farmers as the need arises. Land charges were settled by APNL. Also, farmhouses will be built by APNL for the farmers and their workers' uses. Also, farmhouses will be built by APNL for the farmers and their workers' uses. Okay. Roads are to be constructed by APNL to link the farmers together and to allow easy transportation of harvested rice to the location of the rice milling plant, which is to be built in the middle of the land areas allocated by the state government for the Ofada rice project. The project will be in 2 phases as follows. 1, processing of Ofada rice for local consumption. 2, pre-processing of Ofada rice for export to other countries. Phase
Thank
1.
you very much. So, thank you very much. So, they've stated clearly that this project is going to take 2 phases. The first phase is to process Ofada rice for local consumption. Then, the second phase, they want to reprocess, like polish it, make it look good so that they can export it to other countries. Another person should take from first phase. Please, let's be together so that we move fast. Another person. Okay, first phase, processing of further rice for local consumption. Processes involved in the further rice project. The processes involved in cultivation, production, and distribution of further rice are land preparation, seed selection, planting, weeding, harvesting, parboiling, drying, milling, and then packaging. So this is just a summary of the process, like the rice cultivation process, the processes that they undergo before they produce rice. So you don't need to bother yourself with all those information. It just is the process of rice cultivation that is stated there. Terms of agreement between APNL and of other rice farmers association. The agreement between APNL, the company, and OFA, the farmers, specifies the duties of the company and those of the farmers in the project. Responsibilities for farmers: to prepare land, planting, weeding, harvesting, and then transportation of harvested rice to the milling plant. Responsibilities of the company: the company is responsible for provision of seedlings, production, that's to parboil, dry, mill, and package the rice for distribution. Payment, that the company will pay the farmers through the cooperative association as follows. Initial payments for labor in respect of land preparation, planting, and weeding, and then final payment will be based on the quantity of rice transported to the milling plant. Project costs. The following cost projections have been prepared by the company. A. Land fees. Being an agricultural business, the state government did not charge for the land, but the company paid land allocation fee, which is 5 million for a total of 5,000 hectares of land allocated. So let me ask, what do you think about this 5 million now? How are you going to treat this 5 million? Is it a relevant cost or it is irrelevant? I don't want to call names. Just let me know your thoughts. Share your thoughts with me. Prosper, Ahmed Zainab, Fidelis, Maya. What do you think? You understand better when the class is interactive. If I'm the only one saying something, you won't understand very well.
So I think is a relevant cost, sir.
Okay, it is relevant. Can you give me one reason why you think it is relevant?
While I feel is relevant is because
Yes, please.
from what we are taught in class, the costs that are irrelevant are for research and development. But this is what they said is for allocation of land. So I don't really understand what allocation means. But since it's not for research and development purpose, I think it's a relevant cost.
Okay. Thank you for your opinion. Zainab, Fidelis, Maya. Okay, so costs that are incurred before the project took place. Costs incurred prior to commencement of the project. What do you call it? In taxation, they call it preliminary expenses.
Preliminary costs, yes.
So you incur this 5 million even before. Remember, let me read again. They said, being an agricultural business, the state government did not charge for the land, but the company paid land allocation fee, which is 5 million. So that money was paid before the project commenced. Remember?
So I think it's
okay.
so I think it should be recognized and add to the cost. It should be capitalized.
Why?
So
Just one reason. One
yes,
convincing reason.
okay. It is prior, and all the costs prior to the investment should be capitalized. No, except for research and development.
Research and development costs, is it relevant cost or not?
Okay, it is relevant. It depends. It depends if it's taxation, and it depends if it's a normal cost of.
But this is
Yes.
investment appraisal now. This is finance. This is financial management. Investment appraiser.
It's research and
So what is your
development.
understanding of research and development in finance, in investment and in investment appraiser?
It is not relevant.
It is not relevant.
Yeah, it is not relevant. It is sunk cost.
It's sunk costs. I just wanted you to say it yourself. That's why I said you understand better if the class is interactive. Because they incur the cost before, prior to commencement of the project. So it's not as if it's as a result of the project that they incur that cost. It is possible that the land that they even allocated can be even used for another purpose entirely. Is it stated that the land was for the project? No, that land that was allocated to them, it can be used for another project.
Okay.
But the key point is that it is prior to the commencement. So it is sunk cost. Do we understand?
Yes, sir.
Yes, sir.
Prosper, do you understand?
Yes, sir. Yes, sir.
Okay. Next one, Farmers Cooperative Association. Payment to farmers through the association are as follows. Initial payment, 100,000 per hectare, and then final payment, 500 per kg of rice harvested. Milling and packaging, materials, labor, and direct overheads, excluding the depreciation of plant and factory buildings, has been estimated at 250 naira per kg. Building. So we are going to build farmhouses for farmers, which will cost us 15 million. Then factory building, 150 million. Then plants, rice milling machine, $100,000. Parboiler, $60,000. The stoners, $50,000. Weighing scale, $10,000. Bagging machine, $50,000. Tractor, $200,000. The company has got approval from the CBN to import the plants at the official exchange rate of 750 naira to $1. You understand that, right? Do you understand what that means?
Yes, sir.
Okay, can you explain to us?
So that means that the exchange rates the company is going to use for purchase is at 750 to $1, which was the official rate by CBN. So in converting the cost to naira, it's going to be 750 to $1.
I was muted. Maya, hello.
Hello?
Yes, sir.
Is it Maya that was explaining? Someone was trying to explain the Naira exchange.
It's Zainab.
Oh, Zainab, okay. Please. So you said the 750 Naira is equal to $1, right?
Yeah, so in
So,
converting the cost of the machines, it's going to be the
okay,
cost by multiplied by 750 rather than.
okay. Oh, all right,
Yes.
that's great. Thank you very much. Then lorries for transportation of rice from the farm to the mill, 2 lorries at 100 million each. Construction of roads will cost 100 million. working capital, it is projected that a working capital of 200 million will be enough for the project. Project life. Project life is estimated at 10 years, after which the non-current assets would have no economic value. So before we go ahead, once you have a question that has to do with investment appraisal, know that all the principles that you've learned under NPV calculation will come in. So you don't know the area that the question may test. So you need to remember working capital principles. You need to remember that there are two types of working capital: one-off working capital and incremental working capital. And you need to know that working capital will be introduced at the beginning of the project, and then it will be recovered at the end of the project. You need to check whether the costs that you've been given are all relevant or some are irrelevant. You need to check for inflation. If they've given you inflation in the question, you need to check whether the figures or the values are stated in current year terms. Do you remember all these things I'm saying, right?
Yes, sir.
You need to check whether inflation will start in year one. All those principles you need to remember. And then you need to check if there is a capital allowance. You need to check if there is real cash flow and then money cash flow. You need to check if you have real cash flow and then you have money cost of capital. You need to convert it, because you can only use real cash flow for money cost of capital. So real cash flow for real cost of capital, and then money cash flow for money cost of capital. So all of these things, I'm just trying to draw your attention to them, that you need to check. These principles will come in. So like now we have working capital of 200 million here. So when we start workings, you see that we're going to introduce this working capital at the beginning of the project, and then we are going to recover it after 10 years. Because the project is going to last for 10 years. So the 200 million will be recouped after year 10 for the first phase of the project. But for the second phase, remember that the second phase is a continuation of the first phase, right? You're not introducing another working capital for the second phase. So you know why? This project is in two phases. So I want you to have this understanding that just consider a typical rice farm, right? Where the cultivation of this rice happens. They harvest the rice, they take it to the milling plant, they mill it, and then they put it in the bags. They bag it ready for sales. Now, the bagging that took place, they're going to use the rice locally. Now, that's phase one. But the company is considering exporting this rice. Remember that it's the same rice that was produced. So, can you all hear me? Because I'm trying to explain something important here.
Yes,
Can
sir.
hear you, sir.
So the rice that was produced in that first phase, it is the same rice that they are going to export to other countries. But the state of that rice is not good for export. So the phase two of this project is considering this rice that you want to export to other countries. The export business, will it be profitable? But before they export this rice, they need to make this rice, they need to polish the rice, they need to make it look better. That's why if we progress to second phase, you see that let me not move on to that here. Let me just explain. But I just want you to have that understanding that this is the same rice that they produce in phase one. That's the rice they are still going to export to other countries. But before they export the rice, they need to polish the rice. They need to make it look good, ready for export. let's read further. So the project life is estimated at 10 years, after which the non-current asset would have no economic value. Plant capacity. The expected annual yield from the Okada Cooperative Farmers Association is projected at 3,500,000 kilograms of rice, out of which 3.2 million kgs would be available for milling. A normal loss of 5% is projected from the milling to bagging process. Yeah, that's simple. So from the production to milling, they are going to lose 5% of the rice that will be available for milling. The one that will be available for milling is 3,200,000 kg, 3.2 million kgs. So revenue projections. Market survey reveals the following sales projections. Price per kg probability, 1,000, 50%, 1 to 30%, 1 for 20%. Agricultural tax incentives. Ignore agricultural tax incentives in your evaluation. So that is phase one. So we are going to evaluate phase one. When we are done with phase one, we then move to phase two. But do we understand this phase one before I start solving? So let me get my board.
Sir,
Yes, please.
so the only confusing part is that probability, the last
Okay,
part of the
probability.
question. Yes, sir.
Probability. Okay. So the market survey reveals the following sales projections. The price per kg. So the probability that the price will be 1,000 is 50. Probability that the price will be 1,2 is 30. Probability that the price will be 1,4 is 20. So what you are going to do is, remember when you have probabilities, you add up all the probabilities which will be equal to 1, right? So what you are going to do here is that, let me quickly show here. You are going to do 1,000. Of course, if you start solving, we'll do it, but let me just do it so you understand now. Multiplied by 50%. 1, 2, multiplied by 30%. Then we are going to have 1,4 multiplied by 20%. That's what you're going to do. So do 1,000 multiplied by 50%. What do you have? Then 1, 2 multiplied by 30. 1,4 multiplied by 20%. What do you have?
1,000 multiplied by 50 is 500.
Okay.
1 2 multiplied by 30 is 360. 1 4 is 280. 360 plus 500. Total of
So you are
1,000.
going to add, you've added all of them, right?
Yes, sir. 1,140.
Yeah, so that's the price per
Okay.
kg. Yes, that's the
Thank you, sir.
price per kg. Do you have another person that has a question? Zainab, do you understand?
Yes, sir.
Okay. Fidelis, where is Fidelis? Has it gone off? Can't see Fidelis again.
He's the user. I think he's the user.
Oh, okay, okay. So if you don't have your writing material, get it because I'm gonna share the solution shortly. I want to make it live. I want to solve it on the go, but I don't know what's happening to my board. Can you see now?
Yes, sir.
Okay. So let's start from exhibit 9. Because I'm sharing my screen, you have to use your alternatively. Let me come back and share. Open the document on your phone. Move to exhibit 9. And let's start from project costs. So what you are going to do is, because the project has been subdivided in two parts. So you have the first phase and the second phase. So the information for the first phase have been given. So you are either going to solve the first phase first and then do the second phase. So you can do the evaluation separately, phase 1 separate, or phase 2, and then phase 2 separate, or you can combine. Any of the two can go because it is the same company. The only difference is that the first phase is for production of rice for local consumption, while the second phase is for reprocessing the rice for export. Are we there? Because I want to be as
Yes.
I'm explaining the project cost, I'm going to explain what you are to do, what you are required to do. So project costs, we said that the land allocation fee is sunk cost, right? So it is not
Yes, sir.
relevant. Then Farmers Cooperative Association, payment to farmers, that is not a capital outlay. So what you are going to do here, because this is a capital intensive project, so you have cost of factory building, cost of farmhouses, cost of machines, right? So all those costs will form your capital outlay. The 50 million, the first one there is farmhouses for farmers. How much is it? Please pay attention. Let's be
50
together so
million.
that you understand. 50 million. So that 50 million is a capital outlay. Then factory building, 150 million, right?
Yes, sir.
That is also capital intensive. So that's why you have the farmhouse, 50 million. Look at my screen. The factory building, 150 million. Then the plant, rice milling plant is $100,000. Parboiler, $60,000. The toner is $50,000. Weighing scale, $10,000. Bagging machine, $50,000. Tractor, $200,000. So you can do it in two ways. It's either you add $100,000 to 60 and then 50, 10, 50, 200. Then you get the total and then you convert it, or you do it separately, like you do it one by one. But it is better to do it all at once so that you save time. So you add $100,000 to $60,000. Are we together?
Yes,
Yes,
sir.
sir.
To $50,000, then that's 100,000. Use your calculator, please. $100,000 plus $60,000 plus 50,000 plus 10,000 plus 50,000 plus 200,000. What do you have?
$470.
Great, 470. And we are saying that the rate of conversion is 750 naira to $1, right?
Yes, sir.
So what are you going to do now to convert?
Multiply by 750.
Multiply. So multiply by 750. What do you have?
352,500.
352,500. That's a million, right?
Yes, sir.
So you are going to add that 352,500 to the cost of farmhouse. That's the 50 and 150. What do you have? Is there another capital intensive project? Is there another cost there that is capital in nature? Yes, we have. Okay, lorries. Can you see? Lorries for transportation of rice from the farm to the mill. 2 lorries at 100 million naira each. That is 200 million, right? Are we together? Please let me know if you are following what you are doing. If you don't understand, draw my attention. Please let me know if you are following. Zainab, Maya, Prosper, user. Please let
Yes,
me
sir.
I'm
know.
not
I'm
following you now.
following, sir.
I got lost at the point at which you were adding some figures to
Where did you
150,
get lost? Where precisely?
150,
Okay,
150,
okay,
and
okay.
then 50.
So if at
Then
any
that
point,
conversion. Sorry, sir,
if
that
if at
conversion, I
any
did not get it.
if at any point you get lost, let me know, because if you are quiet, I will just assume you are following. Please, if at any point you don't understand, let me know. So now what we are doing is that for the factory building, you understand the farmhouse and then the factory building, right?
Quite well,
Then
quite well.
the plant, we said the rice milling plant was bought at $100,000. The parboiler cost $60,000. The weighing scale cost $50,000. Bagging machine $10,000, and then tractor $200,000. Now the conversion rate is 750 naira to $1. That means if you have $1, it is the same thing as what? 750 naira. So if you have $470,000, it means that you need to multiply by what? 750 to get the value in naira. Because $1 is equivalent to what? 750 naira. So that means $470,000 multiplied by 750 will give you the naira equivalent. That's how to convert it. Do you understand now?
Yes, I do. Thank you.
So when you do that multiplication, you get the naira value of these plants, which is 352,500, right?
Yes, yes,
Remember
yes.
that it is in million. Yeah, so that's where we stop. So the next cost here that is capital in nature, lorries for transportation of rice from the farm to the mill. 2 lorries at 100 million naira each. That is 200 million. Is there another capital cost? Yes, construction of roads will cost 100 million. These are the things you will do in your exam. These are the things you will look out for in your exam. So you can see that I'm picking out the project, the costs that are capital in nature to form the capital outlay. Do we understand?
Yes, sir.
So construction of roads, 100 million. Add up the total capital outlay. Add the 50 million for the farmhouse, factory building, 150, and then the factory plants, total of 352,500, plus lorries, 200 million, plus road construction, 100 million. What do you have as the total capital outlay? Everybody should do it, please, because I may call anybody to give me the answer. But if
We
you're
can
not
see the
doing, if you
figure.
don't
We
do
can
it,
see the
you will
figure
not
down.
follow.
Um,
You said
the figure for road and can see it down.
the figure for road is 100 million.
Okay.
The one for lorries is 200 million.
Three five two 500 500. 352 million 500,000.
That's the total capital outlay.
Yes, sir. Any other person can confirm.
Please, another person to check.
No,
I mean
it's
everything, the total of everything, the capital outlay.
it's 852,500.
852 500. Please, is it Fidelis? You need to check very well before you write.
Yes, Fidelis, sir.
Okay. Please, another person. I'm waiting. Okay, 852, right? That's correct. 852 500. That's
Yes, sir.
correct. So that's the capital outlay. So the next step is after the project cost, what do you have next there? You have the plant capacity, right?
Yes, sir.
The expected annual yield from the Further Cooperative Farmers Association is projected at 3.5 million kgs of rice, out of which 3.2 million would be available for milling. So let me explain this. You know that typically when you cultivate any product in the farm and you harvest, in the course of doing that harvest, there will be small losses. Like if you are packing, there might be small portions that may be lost in the course of you doing that. So the whole process from harvesting to taking to the store or wherever you are keeping it, and then to the milling process, there is usually a loss in terms of the quantity. The quantity you have or the quantity harvested may not be the same with the quantity that you've taken to the rice mill, right? So even in the rice mill, as they are milling the rice, you see that there will still be some losses in form of broken. Someone that is familiar with rice milling, you understand what I'm saying. If you have like 5 bags of rice, like that's raw rice with the chaff, if you take it to the rice mill, you discover that you will not get exactly 5 bags again after they've made the rice. There will be small reduction in the quantity of the rice. They said that it will be 4.5 or something, but there will be a loss. So that is in a normal situation, you will see that kind of a thing. So that's what this question also is saying, that the expected annual yield, that they are expecting that, okay, they will get 3.5 million kgs of rice. But out of that 3.5, only 3.2 will be available for milling. So, and then a normal loss of 5% is projected from the milling to bagging process. Like I was saying, in a typical rice mill, when you go to the rice mill, you see that the process, in fact, some people will just be there to be packing the rice that is like waste. Some will use it to feed their livestock and all that. So what we are saying is that in the course of that milling, the cost of milling the rice, a normal loss of 5% is projected. That means 5% of 3.2 million will be lost. So what we bag eventually will be the difference. So work out 5% of 3.2 million. What do you have? Keep your calculator closed because you'll be using it.
So what did you say we should
need
calculate?
5% of 3.2 million. Not just calculating it, you need to understand what you are doing. That 5% is a loss that we've projected from milling to bagging. There will be a loss of 5%. So what is 5% of 3.2 million?
160,000.
160,000. So that means that out of the 3.2 million, you only have 3,040,000 left. Do you agree? Hello? Hello?
Yes, sir.
Please, let's contribute so that I will know that you understand what you are doing. When you are quiet, I'll just assume that you understand and I will go ahead. So the 5% will be lost. That means only 95% will be available for bagging. So what is 95% of 3.2 million? Work it out.
3,040. 3,040,000.
Yes. So this is it. That's the quantity that will be available for bagging. 3,200,000 times 95%, which is
So I have a question.
3,040,000. Okay.
Why did we use 3.2 instead of the 3.5?
Okay. So they said the expected annual yield from the further rise from the farmers is projected at 3.5 million. Abi? The first reason is that is just a projection. Are you there, Prosper? Is it Prosper that asked the question?
Yes, sir. I'm with you, sir.
So I'm saying that the 3.5 is just a projection. It is even stated that it is the expected annual yield from the Federal Cooperative Farmers Association is projected at 3.5 million kgs of rice. Now, out of the 3.5 million kgs, only 3.2 would be available for milling. That means the 3.5 is just a projection. The actual kg that will be available for us to take to the rice mill is just 3.2 million. That's the actual. But we were expecting 3.5. But when we did the production, what eventually came to what we got was not 3.5, but it's 3.2. 3.5 is what we were expecting, the projection. But when the rice was harvested eventually, what we got was 3.2 kg. So is it not what we've gotten from the farm that we'll take to the rice mill? Is it what we were expecting that we'll take or what we have gotten?
Oh, gotten, sir.
Yeah, so that's it. Do you understand now?
Yes, sir. Thank you, sir.
So even the 3.2, the question went further to say that out of the 3.2 that we are taking to the rice mill, there will be a loss of 5%. That means only 95% will remain. And that is the calculation that you did earlier, which gave us 3,040,000. Do you understand?
Yes, sir.
So now that we have gotten the quantity that will be available after the loss, we calculated the price per kg earlier, which gave us 1,140, right? So you are now going to multiply the price per kg by the quantity that will be available. So what you are doing is you multiply 1,140 by 3,040,000. Please, everybody should do it, because I'll ask any person. I can ask anybody to give me answer. Zainab. Zainab,
Yes, sir.
are we
I'm not seeing the
together?
figure. Yeah, I stepped out, please. And with my earpiece, I'm not seeing the figures.
No worries,
Just,
no worries.
yeah. So in the
Uh,
next 2 minutes, I'll be there.
you need to take our class serious, so
I'm
please.
serious, sir. I'm serious. I'm serious. I just stepped out.
Maya,
I'm using a laptop, so I can't move
I'm
around
here.
with it.
okay. Please, are you following?
I think so. Not really, but I'll catch up.
Okay. If there's any area you don't understand at all, let me know so that I'll explain.
Okay.
Okay, so what do you have? 1,140 multiplied by 3,040,000. What do you have, Prosper?
3,465,600,000.
Great, great, great. That's great. So that is the revenue. That is the revenue. Remember that we have calculated project cost, capital outlay. Now, we have gotten the revenue. What we are going to do next is to check the production cost. Remember, the question says there's a payment that we are going to make to farmers. Let's go back to the question. After the revenue projection, or
Sir,
before that, yes, please.
sir, please, the 95%.
Yes.
It's what did you take it for?
Okay, so open your question, go to page
Yeah,
174.
I'm
Are you
there.
there?
Okay, I understand now. The loss, the 5%
Yeah.
loss.
Yeah,
Okay,
that's
fine.
it. So let's look at the other payments that we are going to make. Remember, the ones we considered earlier were the capital costs. So we've looked at land fees, irrelevant, farmers cooperative association payment. Okay. Payment to farmers will be as follows. Initial payment, 100,000 per hectare, right? And then final payment, 500 per kg of rice harvested. So 100,000 per hectare. How many hectares of land are we using here? Check. I want you to give me that answer. How many hectares of land are we using? I need an answer, please. Need an answer.
5,000.
5,000. Thank you. So multiply by 5,000. Multiply that initial payment by 5,000. That should give us 500 million, right? 100,000 by 5,000. That should be 100 million. Confirm it. That's the initial payment. Have you confirmed that?
So what do you
Initial
say we
pay,
should confirm?
the amount. You're multiplying 100,000 by 5,000, and I said that should be 500 million. I hope you are writing, no? Have you been writing? Are you people writing at all?
Yes, sir.
Let me confirm from other people. Are they writing? Other people, Maya, Zainab, are you writing at all? If you're not writing, I'll give you time to write, because you need to look at it again. Because if we finish this phase 1 today, we'll continue with phase 2 on Saturday next week. And that should be our last class, hopefully. Where I will be giving you tips and other things you need to know about case study. If you've not been writing, I'm giving you 10 minutes to write. Please, you need to write this down. You need to take it down. If you're not close to your pen, get your book and put it down. Unless you want to screenshot it. You can, alternatively, if you're using your phone, you can do a screenshot, then take it down later. Which will be faster for us. Or you can snap it if you're using your laptop. Any of the two will be fine. Please let me know if we can go ahead. Because of time, I want to finish this phase today. And even if I don't start phase 2, let's finish phase 1. Remember that this phase 1 that you are doing, it is not just to do the calculation. After doing all these calculations, you are going to interpret your results. You're going to interpret
Can you
your
scroll
results.
down?
Sir, can you scroll down a bit?
Okay. Like this? This
More.
fine?
Yes, sir.
Just take it down so I will explain.
So I have a question.
Okay.
So the calculation of this final payment, the 3.5 is from where, please?
Okay. So the final payment. First, let's go to the guiding principles. It says final payment will be based on the quantity of rice. Final payment will be based on will be 500 kg, 500 naira per kg of rice harvested. That means the payment that's the final payment will be the total quantity, that's in kg, the total kg harvested multiplied by 500. So each kg, 500 naira. So if the quantity harvested is 2000 kg, it will be 500 multiplied by 2000. If the quantity harvested is 5000 kg, whatever it is that it is the quantity harvested, we're going to multiply it by what? 500. Now, let's go back to the plant capacity. It is expected that annual yield from the Ofada Cooperative Farmers Association is projected at 3.5 million kgs of rice. That's where the 3.5 million is coming from. Do you understand now? Do you understand now? I'm talking to the person that asked the question.
Yes, sir. Sir,
Okay.
I understand. I think I'm mistaking that quantity with the quantity we use to get our sales value, our revenue value.
Okay, so please, you know that thing is a trick. All the different quantities that you can see there, it's a trick, so that if you are not careful, you go and pick a different quantity and then put where it is not supposed to be. So the 3.5 million is the kg projected that we are going to harvest. The 3.2, it is the quantity available for milling, the one that will take to the rice mill. Then the 3,040,000, it is the one that it is the one available for bagging. That's after milling. You put it in the bag now, then take to the market. So it is the one that is bagged that is 3,040,000. So it is the one bag that will be sold eventually. That is why it is used to calculate the revenue. The one available for milling, you are not going to use it to calculate your revenue. The one that is projected as the harvest, you will not use it. It is the quantity that is available for bagging. That's after milling, you carry out, you put the rice in sacks, in bags, and then take to the market for sale. So that is the quantity you are going to use to get your revenue. But for the payment, the final payment is based on the kg of rice harvested. That is why I drew you to the guiding principle that the final payment is based on the kg of rice harvested. Do you understand? Do you understand better now?
Yes, sir. Yes, sir. Thank you, sir.
So now, after the final payment, you have another cost here, that milling and packaging, materials, labor, and direct overheads, excluding the depreciation of plant and factory building, has been estimated at 250 naira per kg. So milling and packaging costs, I hope you understand why we are using 3.2 here, because that's the quantity available for milling. So you are going to incur milling and packaging costs on 3,200,000 and 3,200 kg. So the cost per kg is 250. User, Zainab, Maya, please, do you understand why we are using 3.2 for milling and packaging?
So you said that is the quantity that is available for milling out of the 3.5.
Okay, great. So add up the total costs of production. What do you have? The total cost of production, that's the payment to farmers, the initial payment, final payment, milling and packaging. What's the total? You have it in your note now. I thought you copied it. So you have 3,050,000. So that is your cost of production. Now, to get the difference between the revenue and the cost of production, that's your contribution. Work out 3,465,600,000 minus 3,050,000. That's the revenue minus the total cost of production. That will give you contribution. And the contribution is 415,600,000. Remember that this project is going to last for 10 years. So that's the contribution per year. So now that we've gotten our contribution per year, we are going to get the net present value. Remember, we have a capital outlay here as 852,500, right? So we are going to calculate your NPV, but the contribution is constant. So we are going to use annuity factor, year 1 to 10. Do you understand? Do you understand?
So with the annuity factor, we are looking for the present value of the contribution.
We are going to do NPV of the project itself, not just the contribution. contribution is going to be our inflow. That's the inflow that we are expecting on a yearly basis. Remember how we got the contribution? The revenue, that's the sales minus the cost of production. When you deduct the cost of production from the revenue, you get this contribution of 415,600. And the project is going to last for 10 years. So that 415,600 is the inflow that will be coming in yearly. So using your normal NPV procedure, the capital outlay will be your initial outlay here, right? Then the contribution will be your cash inflow, which will be from year 1 to 10. So when you have constant cash flow, that's regular cash flow, what are you going to use? Is it annuity factor or discount factor?
Annuity factor.
Yeah. And remember, we also have working capital. So your NPV, you have the initial outlay year 0, which is that the capital outlay, this one, 852.5. It's a million. Then your working capital is the question said working capital is projected. That's item H. Working capital, it is projected that a working capital of 200 million would be enough for the project. Remember, I told you that working capital will be introduced at the beginning of the project, right? And then it will be recovered at the end of the project. So at the beginning of the project, which is year 0, you introduce working capital of 200 million. The discount factor for now, I want to ask, where is this 15% coming from? Where is this 15% coming from? Do you think it was an assumption? Do you think it was assumed? Hello?
Any question?
The 15%, working capital of 15%, and the discount factor of 15%, where is it coming from? If you look at that requirement where we read exhibit, go back to exhibit 6. Are you there? Go back to exhibit 6.
We are there, sir. I'm there, rather.
Read the last requirement. That's item 2, the last item. Before
An evaluation of
yeah,
an
read it.
evaluation of the further arise projects. Your appraiser should cover the 2 phases of the project and provide advice to the board on whether to go ahead with the project or not. Also indicates whether the company should stop at phase 1 of the project or should implement the 2 phases. Assume a rate of return equal to the target set by the company on its invested capital.
So you can see where the rate of return is coming from, Abi.
Yes, sir. But it's not
But
stated.
it is. When you go, yeah, I understand why you people may not know where it is coming from, but the question says you should assume a rate of return equal to the target set by the company on its invested capital. When you go back to the previous exhibit, you see the rate of return. Let me show you where it is. Let me check that exhibit and show you. But I just want you to know that the figure was not just put, the percentage was not just put there. It is gotten from one of the exhibits. So that reminds me, that's to show you how case study is structured. So you see that information that you see, they would have easily told us that you should assume a rate of 15%, but they are referring us to the rate of return set by the company. So you have to go and look for it. You need to check. That's why case study, if you are reading, you have to be inquisitive. Like you need to be asking questions as you are reading the case. What are they saying? What am I supposed to do here? What am I not to do here? What and what and what is expected of me? That's case study for you. They won't just give you everything
So
like that.
you are solving, sorry, sir, you are considering case 9, they can refer you to, sorry, you are considering like exhibit 9, for instance. So they can refer you to go get information from exhibit 2.
Yes. Yes. They can. And they won't be apologetic. They won't apologize, because they assume that you should be able to comprehend the entire case. Okay, look at this. Go to page 1. Go to page 159.
I'm there.
Okay, so look at the under goals. They say by 2030, you will be a global food and agribusiness that delivers food, feeds, and fiber along with innovative solutions to support our customers' growing needs for sustainable and transparent supply chains, with a clear focus on tomorrow's consumer preference. To achieve this goal, we have set the following targets: return on equity greater than or equal to 12% from 2021, EBITDA / invested capital greater than 15% from 2023. That's what the 15% is. So remember, the question says you should assume a rate of return equal to the company's invested capital. So you can see the invested capital percentage here. That's where they picked it.
Sir, is greater than 50% the same as 15%?
Yeah, Prosper. So that's case study for you. But remember the year that they said it is going to take effect. A very good question. But then greater than 15% from 2023. Which period are you working for? Are you looking at? Which period are you considering? Hmm?
I understand.
Sorry? So I'm saying that it is that 15, that greater than 15% will be from 2023. So if you go by the statements that we have in the question, I mean the financial statements, you see that you are evaluating from under that trend. You see the years that you have there. You have let me quickly check. You have up to 2021, from 2019 to 2021. So that means that the period under review, you've not reached 2023 yet. This 2023, it is from 2023 that the percentage will be greater than 15%. Anything or any year before 2023, it is going to be 15%. Do you understand?
Yes, sir.
Okay. So let's go back to the solution. So working capital 200 million, discount factor. So contribution year 1 to 10, the contribution that we calculated, 415,600. That's year 1 to 10. Annuity factor, year 1 to 10, is 5.019. Then, after you've done your contribution, the next one, remember that working capital will be recouped. Please don't forget this, because most students, they don't know how to treat working capital at all. Some will even ignore working capital completely. Please don't forget the treatment of working capital. If need be, go and revise principles of working capital and investment appraisal principles. So working capital will be recouped at the end of the project. That's at the end of year 10. So it will not be minus again. So your net present value will be 1,082,800. That's positive NPV. So based on the principles of NPV, this project should be accepted, right? They should continue with this project of processing the rice for local consumption. Or do you think they should reject the project?
No, sir, the project should be accepted
Why do you think the project should be accepted?
because it gave a positive NPV.
Okay. Any other person? Should we accept this project or not?
So the project should be accepted. It
Okay.
looks viable with the positive NPV.
Okay. Thank you very much. You are all correct. So the project should be accepted. Now, my question is, the second phase of the project, this working capital of 200 million, are we still going to use it to evaluate the second phase? Please share your thoughts.
So the second phase of the project, I think if we are going to use the initial outlay, then we should be using the working capital. Though the working capital must have reduced, but I don't know. They didn't give us a new value for working capital. Or
So, okay, thank you for your opinion. Any other person? Yeah. Zainab, Idris, what do you think? Remember I said case study is always interactive. If it's interactive, you understand better. Okay. So the 200 million working capital, we're not going to use it to evaluate the second phase. Why? Why are we not going to use it? We're not going to use it because the project is not a new project that we're embarking on. That's number one. If you are embarking on a new project, remember that it's just a continuation. I told you earlier that the phase one, it is the same rice that we have produced under phase one. The only thing that we are doing is we want to make the rice to look better. That's why we are going to polish it. So as if we read the second phase, you see that they are going to get additional machines. Rice polisher, rice whitener, all those machines that they need to polish the rice, to make it look whiter, to make it look smoother, and then to make it look better so that they can export it. That is the only difference. So the rice they are using to export, it is the same rice that we are cultivating under phase one that we use to export to other countries. So we are not using working capital to evaluate the second phase. Just like Prosper has said, if they gave us a working capital for the second phase, of course, we'll consider using it because we know that that is the amount that has been kept to run the second phase. But we have working capital of 200 million, which was given under phase one. And we recouped it already. We are not using it to evaluate phase two. Do we understand? You need to go
Yes,
back
sir.
and look at your working capital principles because you don't know where the examiner may test. They may decide to test incremental working capital. So if it is incremental working capital, you need to know that it is only the increment that you're going to consider. So you need to go back and check the principles of working capital and investment appraisal principles so that when we come next week Saturday, as we are looking at the second phase, you have a better understanding of this case. So do you have questions regarding what we've done today? Any questions for me? Or any questions for case study in general? Any question at all, let me know. So all the things that you think are challenging, all the areas, get them ready for me next week because next week will be our final class. We'll have a final class next week. So if you have any area that you are having issues with, let me know so that we'll look at it when we meet on Saturday next week. Do you have any questions for me for today's class? What we've done today, do you have questions for me? Do we understand all that we've done?
For today, yes.
Sir, I have something to.
Okay.
Sir, please, can we maybe after we've completed the phase two of this question next
Yes.
week, then we can turn it to a full-blown case study, like we answer it starting from the executive summary, so that we know the
Okay.
steps to take and how we can use the information derived from the calculations and where they're supposed to be used.
Okay. All right. Thank you
Thank
very
you,
much
sir.
for that. I'll consider that after we are done with the case. Either I solve it and then share it with you, or yeah, I'll do that when we finish
Okay.
the second phase. Yeah.
All right, sir. Thank you, sir.
All right. Okay.
So,
Thank you, sir.
please, my own
Thank you,
question would
Fidelis.
be,
Next question.
yes,
Okay. What's the question?
where the other SWOT analysis and those models will come I still
That
don't
is where
understand
you
the
have,
question.
okay, when SWOT analysis on those
Where
other
all
models,
those models, yes, in normal case study question, because
okay, thank you very much for this question. You know, uh, SWOT analysis and those other models, they will come in when it is business analysis. So in case you don't know, let me inform you that case study is tested to cover three major areas. It is either they are testing financial analysis, that's financial statement analysis, which will be ratios, trend, either ratio or trend analysis. That is financial statement analysis. That's item one. The second area that is tested is financial data analysis, which is project appraiser. That's what we have done today. The third area that can be tested is business analysis, which is those models. So they cannot test the three because you don't have three requirements in your exam. Or if they want to make it to test the three, he said that they will make the other one a sub requirement under the main requirement because you only have two requirements, right? So what they usually do is they test financial statement analysis, which is ratio and trend. And then they test financial data analysis, which is investment appraisal. For this case in particular, what they tested was trend, which is financial statement analysis, and financial data analysis, which is investment appraisal. So this case does not have business analysis. So those models cannot be used here. So those models, you can use those models when they test business analysis. So if it is business analysis, it has to do with the business operations. And business operations has to do with input, processing, and output. So if it is a case that has to do with business analysis, they will be telling you the business processes, the production process, how the company gets raw materials. They'll tell you the strengths. So it depends on how the case is structured. So the right model to use to carry out your business analysis will depend on the contents of the question. So where they are talking about the company's capabilities, the company's competencies, and the company's capabilities, competencies, and one other one. That is where you know that yes, they're talking about SWOT. It can be SWOT. SWOT can come in there. Because what the company has that the competitors don't have, that becomes the company's strength, right? What the company does not have and the competitors have, that is the company's weakness. Do you understand?
Yes, sir.
So business analysis may not necessarily, you will not be asked to do calculations. So business analysis, just like the name itself connotes, you are analyzing the business operations, the activities, the impact on the business operations. So where you see external factors that are affecting the business, like political environment, that's the government policies, government laws, the the rules and regulations. Then you have ecological factors. That is where Pestel model will come in. That's why I said it depends on how the question is structured. Where you have external factors that are affecting the business. So the right model to use to analyze that business operation is what? Pestel model. Where you have the company has some strengths and then some weaknesses. And you want to analyze that business. What are you going to use? You're going to use SWOT model. So you need to revise pestle, I know that pestle and salt, you can answer it anytime, any day. But there are some like value chain. I did value chain with you, right? Where I was telling you about inbound logistics, outbound logistics.
Yes,
Yes, sir.
Yeah,
last
yeah,
week.
so exactly. So that is what business analysis is all about. Do you understand the difference now?
Yes, sir. But will
Mhm.
there be a situation where it will be stated in the question, but
No,
not in the requirement?
they will not categorically state that you are to carry out business analysis. Like I said,
No,
the
like all this
information,
information might be given.
yes, the information will
I
be
saw a
given.
question
So
like that.
it will now be based on your own professional judgment to know that this is the right model you are going to use to do this analysis. But they don't
Like,
usually test business analysis like that. They've always been testing financial statement analysis, which is ratio and trend, and financial data analysis, which is investment appraiser. But business analysis too can be tested. And trust me, if they test that business analysis, many students may not know what to write because all they've been doing, all they are used to is ratio, trends, and project appraiser. But like I said, business analysis has to do with business operations. And you can use any of these models to carry out your analysis depending on the nature of the question. Do you understand?
yes, sir.
Yeah.
Yes, sir.
So,
Sir,
sir,
another.
Precious, sorry, Prosper, do you want to go first? You can go.
No
Okay, I
worries.
just want
Prosper can
something.
go, yeah.
So I just wanted to remind you, you said we are going to send a material on that external business and the internal factors that affect business. You've not sent it.
Okay. That's
The models.
Pestel now. That's Pestel model now. I don't
Yes,
need to
sir.
send the material on Pestel now. Pestel is simple now. You don't, it's what you,
No,
okay.
but there was a material you share
Yes,
with
sir.
us.
I wanted to
Yes,
share
sir. Last
something.
last
Okay.
week.
Okay.
Yes, sir.
Okay.
Yes.
Okay. I'll check and share. I'll check and share.
All right, sir.
Okay, so what I
Ladies.
wanted to ask is, in case they text business analysis and all of that, is it
Yes.
going to be forming part of our report, the body of the report, or
Yes,
it's
of
going to
course.
come under appendix?
No, it's the same process. Those
Is it
8
process?
basic keys, those 8 keys that you know, those 8 basic keys, the same way you will do your report, if it is a ratio that you have done, if it is investment appraisal that you have done, that's the same way your report will be structured if it is business analysis.
Okay, that's good.
It's the same thing, yes.
All right, sir. Thank you so well.
All right. Okay.
So for this business analysis, sir, this I saw a question, although I just saw it on scene.
Which year?
Someone's solution. 20, I think it's 2023 May. I don't know the
2023 May.
yes,
Okay,
yes.
I will check it. So if it is truly business analysis that was tested, I would
Like
love to.
if it was, but all those in requirement, those informations were there, like comparing the business internal and external.
Okay,
I
I'll
will
check.
get it and check if really it ended up in business. The requirement
Okay,
was business
okay.
analysis. So.
All right, all right. If it is business analysis, I think I would like us to solve it.
Yes, sir.
So so that you'll be familiar with how business analysis question should be tackled.
Okay, sir.
Okay.
Yes, yes,
Do you have any other question for me today? If you don't have any question, thank you very much. Remember to revise your working capital principles and the other principles for investment appraiser. Yes. Thank you very much and do have a great day ahead.
Thank you,
Thank
sir.
you.
All right.
Thank
See you
you.
next week, Saturday.